afternoon. From the floor of the CME, this is Chris Robinson with your Traders Exclusive comment here today, Wednesday. 2 more days in the month. We're coming up to a very critical end of month, end of quarter USDA report. I can't stress that enough. We have reports every month in the livestock as well as the grains, but I would say this is going to be probably the most important report of the year. Not only because we're going to get fresh fundamental news, fresh numbers, how many acres were planted, as well as what carryouts exist, but also we're at the bottom of a kind of a trough in corn and soybean prices, not so much in wheat. However, I think moving forward, if you're a producer or if you're a speculator, between now and the end of August is where we get the most uncertainty with not only corn prices, but also soybean prices. Uncertainty breeds opportunity. Opportunity gives you, lots of chances to get in and out of the market, either on the long side or the short side. I'd say that as we set up going into this report, the funds are once again short. We had a short covering rally in corn, a short covering rally in wheat. Both of those were pretty short-lived. And we're moving into the report with the funds basically short corn, wheat, and beans. That means they're betting on lower prices. Will they get paid, or are they selling it in the hole? We'll know Friday, and then certainly next week. We come back, we're open Monday for a half day. Then we've got the 4th of July weekend in the middle of the week. You may see some discombobulated trading there. There's all different kind of strategies to catch this market. It just depends on what your risk is, what your opinion is. But every 12 hours, we get a new weather forecast. And again, between now and the end of August, you're going to see some volatility. If you're a producer or a hedger, it gives you opportunity. Switching over very quickly to the livestock. Livestock had been on a great rally. We had a pretty severe sell-off. We had given back basically half of the year's rally. If you pull up a chart of either fat cattle or feeder cattle, the managed funds are still long a bunch of fat cattle, a bunch of live cattle. They're in a precarious position right now because they're either going to reload and push us higher, or we may get some pressure lower. If I'm a producer, I'm happy about the fact that feeder cattle are $23 higher still than where they were at the beginning of the year. Live cattle, fat cattle are still $14 higher than where they were at the beginning of the year. Now, you may have missed the highs, but what you don't want to do is you don't want to be in a situation where we're right back where we were in January and you've done nothing to protect these prices. This building was built to hedge that type of risk. You can place your risk in somebody else's hands. So if you're not familiar with how to hedge or the tools are available, you need to get in contact with somebody, me or somebody else, and really learn how to protect your business risk. This is the time of the year where you can see a lot of volatility in the grain and livestock. That's really about it. If you're looking for help, give me a call. You can find me on the web, Chris Robinson. But again, I would say this Friday's USDA report, very, very important. We could get some good volatility in its wake. Have a great day. This is Chris Robinson.